Yo, 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 yo. Is it raining on you? It's rain, rain, rain here. Rain, rain, rain. Go away, come again another day. So, good morning, everybody. Welcome to Forex.Today. Let's do some Forex today. Get on with it. Is that right, Lowell? Welcome. Got you looking for the same thing. It's a new thing. Check out this supreme. I'm living low next to the base. Turn up the radio. Hey, good morning. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small. Stay humble. Focus on the long term and never risk money you cannot afford to lose. Ni hao ma. Hi, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being here. Traders Way is investing into your success. So please, when you do feel confident in the skills that you've developed because of these webinars and you're ready to trade real money, please consider TradersWay.com to be your broker. Hopefully they've earned your loyalty and respect. Right now you can visit TradersWay.com, download the demo, the MT4, play some trades, check out the execution speed, the spread, the swap, etc., etc. TradersWay.com. Let's get into it. Yeah, the delay happens when I'm full screen. 1, 2, 3. Well, there's a slight delay. I don't know what it is. What can I do? Okay. So this is where we left off. I guess it was day trading yesterday. Down, up, 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 down. Yeah, boy. Cool. So if you're a bear, you're still getting paid. It's all right, huh? Cool. So continue mission. We need a break though, of course, but still continue mission. A breach below that will be important. So let's go through gold and oil and Bitcoin right off the guns, right off the bat. Take a look. We never got our pullback on this WTI. Too bad, so sad. Maybe it'll happen next week. So all you have to do is adjust. What's another word for adjust? Contend. Wink, wink, nudge, nudge. I contend. So I'm going to have to contend with that. That's not ideal, but it happens, so I got to deal with it. It's not ideal, but I will deal. I deal and undeal. Right? Ideal and ideal. Ideal and ideal. Anyways, cool. Okay, still got to wait. Just got to wait. What can you do? I don't buy high. That's that. Notice the lovely move here to here. That's nice, but you have to trade it like a breakout. That's all. This is pro-global macroeconomics, pro-inflation. So, if that's what you're looking for, it's confirming something. Gold is continuing its move. So we had this up, sideways, and now up, and then probably sideways again, but it's moving up. Okay. Up, 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 up. Okay. Seems like maybe forever. Let's mark this. So we're at 16. We got about 200 left before we really have to seriously worry. So right now, if that's what you believe, now you know where you're going. And with that, you can fold together monthly plans, weekly plans, and daily plans. Huh? Right? You see that? Now you can start folding in tomorrow's trade plan and next week's trade plan because you believe you know where you're going this month and part of next month. Okay. Up. Up. Way up. So we haven't even quite adjusted because we don't have a new higher high yet. These pivots haven't reflected any new bold move. So it might even take, according to this, maybe even 3 more months before you get that target. Now imagine you are able to do the same thing over and over and over again for 3 months. Look to buy dips, look to buy dips. Do I buy a dip today? Do I buy a dip tomorrow? What about next week? Am I buying a dip? Speaking about dips and bips and bits. Okay. Up, 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 down, down, buy, up, up, down, buy, up, up, down, buy, up, up, down, down. Remember yesterday about this time, or exactly this time, 24 hours ago, one of the things I was talking with you about is that we were in here, which is sort of the middle road. It's too high to buy, but if you were a bear, you would be looking for the lower high, lower low scenario, right? Yeah, sure, Peter. That's part of our daily routine. Okay? So, if you were a bull, it just means you can only buy up here, that you would never buy in here, okay? Because you can't. First of all, it's the middle of the road. It's dangerous. I think I called it FEB wars. And when FEB wars come in, it's where some people are buying the dip and other people, these people here, are selling the rally, right? So you got bears, okay? And some people want to do this and some people have done that. This is where you need to buy low, sell high, and stay out of the middle, generally speaking, okay? What that was yesterday were these sort of FEB wars, but more than anything, you just couldn't buy it, okay? We don't buy there. We buy here if you're a bull. So the only people that could be trading this yesterday would be a bear here off the roll reversal or a bear up here off the double top and at least into a range, okay? And then bulls are bulls, right? They're doing this up, down, up, down, up, down, up, down. That's why I say it, okay? But notice that this sets up what? Head and shoulders, okay? Making the music you're busy, but you can't do what you know. You call them demos, but we ride limos too. All right. So, what was it, yesterday or the day before? I moved to stops on quite a few of my trades. I got knocked out with, I think, 400 pips yesterday, so my herd got thin. I called my herd yesterday. But these are still alive. Right? Yeah. So these ones are still alive. What I'm hoping for, hope's not a strategy. What I'm hoping for is I can get a new lower low. And by hope, I mean, please make a lower low, right? I can't really do anything else. I guess I could bail and take my profit now. I can't really move my stops, so I gotta wait. That's all. Okay? Gotta wait. I don't want to bail on these quite yet. And then let's just double check. This has 200 pips, and this one has 133 pips. Okay? So I'm still good with where it's going. Yeah. See if I can just get this through. We're going down to the next level, right? Lucas says, why not just move them all to 63? I'm trying to stay in. I'm not trying to get out. If I wanted to get out, like jamming them at 63, first of all, that's a terrible place to put your stop. Okay, so let's talk about that for a second. Okay, let's call this 63, and let's draw this out in a different color. Okay, putting your stop here is terrible because if people are going to sell again, they're going to sell at 63. And if they're going to sell at or near 63, right? They won't. Some people will sell before 63 and stuff. But you got to remember also that all stops are plus or minus 30 pips away from wherever we are right this second. So if we go up near 63, let's say 62.95, 62.96, and all this kind of stuff, you got to imagine that, right, you got to at least have a stop above 20. Okay? Or in the reverse scenario, at least below 80. So I'm thinking 25, 75, 30, 70, that kind of stuff. Because what you're planning on as a bear is down, 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 up, up, and somewhere in here and here and here, right, you get new sellers and it brings it down. So your first stop should be, you know, at least up here, and then once it starts to make a lower low, then maybe jam it. Okay? Once you're down near 80, so you've gone from 63.00, 62.90, 62.85, then you get 62.80, and you'll notice that a lot of people might start, this is sort of a flip zone back this way, so that's where you jam your stop at 63, okay? Because you'll get paid on this, or you'll get knocked out on that. Having the opportunity, but okay, anyways. So Joe's a believer. Joe says, yeah, he thinks it'll go lower. Cool. So why don't we have some fun here and just double check our math. Let's look at monthly. Okay. And according to my math, we're on our way down to 61, maybe 60. So I got 333 pips already locked in profit. That's my worst case scenario. So I could pick up another 600 pips if I can just stay confident. How many people would go for the extra 600 pips? Nothing wrong with bailing on a double bottom, guys. But I got to stick with my plan, right? So the plan here, like go back 2 months. The sell was here. This was the target. The sell, and now this month, the sell was here. And S2 is actually the target. Unless it flips, then we're going back all the way up, right? Where would bulls buy if bulls were going to buy? They're going to buy at the monthly M2. Oh, look, we're on the monthly M2 and the double bottom. Oh. Yeah, so I got to make a decision, right? Insert fingernails. What are you going to do? Nah, it's only money. It's only money. You know, the sad thing is, what about people that are just trading the volatility now in the last 24 hours? They're like, oh, yeah, I got to get on it. They missed all of this. Missed it all. See, now I can really relax. I mean, seriously, I can relax. My worst case scenario is 333 pips. 200 on this one, 133 on that one. That's not a bad scenario. Okay? So I have to decide. Okay? Now, I can set maybe a better rule and say if the 21 crosses above the 55, that's it, kill it, because we're at a double bottom. You got it? Close half the position. Pete. I know what you're saying. I don't like doing that. You're not wrong. I just don't like doing it. So I'd rather say if the 21.55 crosses up, that confirms the double bottom, I'll take my money and I'll run. And I'll probably, instead of 333, I'll probably walk away with 500. All right, cool. I can live with that. Okay? I don't want to make an emotional decision. Right now, I'm golden. There's no reason to get out except, yeah, we're at a bottom. But I had a plan 2 weeks ago. The plan is still valid. So let's go. Let her run. Let's go, right? I mean, we could be a little goofy about it if you want. I have no problems with being goofy. Let's move this to 225 pips and move this to 1,160, anyways, 160 pips. So what is this? 220, it's 160, 180. Cool. So pretty close to 400 now. Cool. Now my worst case scenario is just about 400. Maybe I can actually make it 400 if I move this one. No. Yeah. All right, there you go. But I'm not scaling out. I want to get paid. I don't get paid to be afraid. Look, random. Look, I'll grab my stop. Look to the left. You see? If you look to the left, it says the pips right there. Okay. So here I can tell you that's 33.4 pips. Now I've moved it. It's 106.3 pips because of the fractional nature of our pricing. You have to move a decimal. So this is exactly, if I can get it, there you go. Oh, no. There you go. 150 pips. Exactly 150 pips locked in on that one. Okay, you see that? So now I'll move it a little closer, and it's 164 pips. Cool. If I bailed right here, right now, this one has 300. If I bailed on this right here, right now, this one has 250. Now what should I do, guys? Should I take the 500 pips or should I go for 1,000? Let me ask it again. Thank you. Stick to the plan, huh? The sweat of your body covers me. Can you, my darling, can you picture bliss? All right, cool. We got one more on this profile. This is what it sounds like when doves cry. I can't get rid of this bug, man. Too bad. Maybe you're just too demanding. Maybe you're just like my father, too bold. All right, let's see if we can figure out how to trade a move like this. I bet you anything this was a green zone. So buy, up, 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 down, down, buy, up, 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 down. Oh, what? Forget it, forget it, forget it, forget it, forget it, forget it, forget it. Ooh, interesting. Boom, buy. So there's definitely a buy here. Almost, there has to be a buy there. There's a buy here. No, no. You might have taken this one and had a break even or a loss. This one, you never even got an opportunity. This one, you definitely bought it. No, this one you definitely bought. And check it out. We're in tomorrow's buy zone. So you have to decide what to do here. Okay? You're either front running it or you're going to set it up for later. Okay? So this is a front run. This is a fade. If you're a bull, you got to choose it. But this, you're right in tomorrow's buy zone. So you need to make a decision. Now, here's the thing. If you're wrong, you're going to be quite wrong. Like, not disastrously wrong, but you want to be quite wrong when you're wrong. Because if you're wrong, it's going to look like this. And you're really wrong in that scenario because it's a reversal pattern. Now, how reversal patterns are born are this. Kick off to 21, which is extremely bullish. Then, let's say it drops today all the way back. It's not that it's a double bottom, but it's back to the 55. 55 predicts a lower high or double top. In this case, you'd look at the shoulder, and then this would produce the new lower low, and then you'd take this distance, and you'd put it off the neckline, and you go to that distance, and you get right back to where we were. So that's what bears are thinking. So bears are actually waiting for a breach and are probably going to want to try to sell it pre-London Open tomorrow if they get the price action. If they don't get the price action, it's because bulls have taken it now and they're taking it long and strong. So which one are you? Andrew, there was a glitch in the matrix yesterday, but it's uploaded, so now I just got to move it over to the course, and then I got to add all the bonuses. So I got to add the OCO, the risk management tool. And then I got to put those bias pivot points in there. And I think that's it. And the day trading templates, I think you already have. So I just got to put those two EAs up there as well. Okay. So that's that. If you're a bull, awesome. If you're a bear, wait for it. Wait for it. All right, so we did a couple of yen pairs, a couple of dollar pairs. We did Bitcoin, gold, and oil. What's up, man? What's up? How can I help you? Oh, we had a request for some exotics. La 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 la. Back into the triangle, but I already showed you this quite a while ago, so it makes sense. Let me just fit this a little better on this time frame. So now you got to move the apex to grab the bottom of it properly. This, so it's a little closer to that. Okay, so we're really set up for next week. Notice it's flipping at all the right spots, so it's just doing what it's been doing for a very long time. We've been in this zone now since the beginning of the year. Okay. Okay. Nothing really new. We're just stuck in the middle of the range. Bulls buy down here. Bears are selling here. Next month, next week hasn't changed that much. So it's just doing what it's been doing. Okay, so as you probably know or should know, this is where bulls buy and this is where bears sell, and it's done both fairly well. So just ride it out, man. Pesos given back. Okay, this is a good lesson because I've been trying to show you this, right? So here's our sell zone. Oops. Here's our sell zone. And here's our target, which we hit once. That's where you should take profit. Let's come all the way back. Another opportunity, right? Hit here, another opportunity to take profit. Notice it's flipping at the M2. You would expect that to happen. And now we have a move back this way. Okay. So I want you to be aware of why I call these flip zones. Like, how did I come up with these ideas? Well, through observation. So I'm trying to force you into the observation. Okay? Trying to force you into the same observation. So you're not just remembering the rules, that Wayne tells you. I'm showing you through your own observations why these are take profit zones. Okay. So this one's fine, that one's fine. This one's still trending up like crazy. This is what it sounds like when doves cry. No entry today. No, maybe an entry tomorrow. Look at the day before's entry. Just beautiful. But no entry. It's too bullish today to even be a bull. Eurozar, it's doing its same thing, up and down and down and up and up and down and down and up and up and down. What's going on, South Africa? Up and down and up. When is that going to happen, Alex? Look at Eurozar doing nothing. It's one of the benefits, like when you're carry trading, you really do want a market like this, but you want to be in at the top. Because if it drops too fast, you make too much money on your pips and you're going to bail on your income, right? You'll take the asset appreciation over the income, but you started the trade because of the income. So what it does is it talks you out of a really good trade. So really, if you're up here and it's going up and down for like 6 months, you're like, yeah, but I'm getting paid every day. So you really do want to be a seller up on high and then let it just fart around, right? Because look at the June high. What if you were just collecting interest every day since June? That's where you want to be. Yeah, Javier says, I think you'll be waiting quite some time. Yeah, that's kind of why I thought. Yeah, Japan is in a weird place right now. Like we talked about yesterday and I think earlier in the week, how they jacked up consumption taxes again and are really killing their economy. Plus the China situation, plus all this other stuff, right? So, yeah, it's just interesting. Random Virus 97, we're talking about a carry trade in which you are earning income, interest. You're earning interest. You get paid every day, a small bit of money. Okay, so let's take a look. Here's that CAD yen long. Here's the target we talked about yesterday. This is where I expect bulls to end this run. Okay. Easy peasy. I was long here, and unfortunately this dip knocked me out. Can you believe it? Poopy diapers, right? This one was the other way because the euro was so weak, so we're trying to play it there. Oh no, this is what I said, a double bottom and then a rise. There you go. That's what I said. Up to the 55, down, and then up. So I'm partially correct here. This has a lot more room to run than the CAD yen, so maybe the yens come down, or the CAD yen's got a lot more room above the monthly pivot. But let's check the other ones for congruency. Here's a very simple buy zone. Here's the target, right? So again, very basic swing trading here. This is a buy zone. This is a target for those buy zones. Okay. Another way of looking at it is, let's change my template. And we'll change the template to what I call Swing Trading Weekly. Oh, that's the wrong one. Hang on. Change it to what do I call it? Day trading bullish, bullish, bullish. I thought I had it up here. I don't remember where I put it. Oh, there it is. Duh. Okay. Bullish buys. Okay. Let's take a look. This indicator says buy in the green zone, and the aggressive target is just a little higher right here. For some reason, it's off the chart. You know what it is? It's probably the old template. Let me put the... Ah, shoot. Don't do that. Careful, grasshopper. All right. I want to do this differently. I want to go to day trading bullish. And then I want to open this up and change my biased pivots from daily to weekly. I'm going to hit that. Okay. Close. And now I got to go to template, save template, and we're going to replace it. Swing trading bullish weekly bias. And go. And it says replace it. Yes. Cool. And now that's my weekly point of view. So let's go back to the 1 hour. Last week's entry was here, and the target is here, bullish profit zone aggressive. Cool, right? Well, it seems like the Japanese are getting their money out of the country as fast as they can. So Aussie yen, this is the bullish buy, and this is the target. Okay, now you got to throw down weekly trade plans. This is the buy zone last week. This is the buy zone this week. This is the buy zone next week. So it seems to be stepping up, don't you think? Up, 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 up. There's the entry. There's the target. Down, down. There's the entry. Up, up. There's the entry. Up, up. There's next week's entry. And eventually you're working your way up here. And if that's true, it's trying to get that way. Slowly but surely. Now, there's a lot of challenge in here. Okay? A lot of challenge in here. But the way you start your day trading, psychologically anyways, is you have to confirm you believe it's going here. If that's true, then every day you're buying dips. Okay? So many people trade and they don't even know where they're going. Doesn't matter how fast you drive your Ferrari if you don't know where the track is, if you don't know where the course is. You're not going to win the race. Yeah, fundamentals ain't on the Aussie side, but the issue is the RBA is starting to say it ain't getting worse. Now, I think they're early on that. I think it can get worse, right? Okay. So remember, it's sort of like in Forex. It's not what you know, it's only what you can prove. It's not what you know, it's what you can prove. So if they're saying it won't get worse, then what they're telling you is there's a bottom in the currency's weakness. So they have changed their tone. Yeah, I think it can, but that's not what I think is irrelevant, right? So it comes down to what is the RBA telling us? And their message and the tone of the message has changed over even just the last 2 months, I think. Okay, that's why it kind of flipped here. But whatever. That's still plausible. Just kind of looks silly hanging out there. I'm going to add this just so it makes sense. Looks like I did this quite a while ago, actually. The way it was hanging there, it looks like I had done it back in January. So the question is, would you have waited that long for the trade? Mm-hmm. Take a look at Aussie. Buyers are buying where buyers are supposed to buy. Buyers are selling where buyers are supposed to... Buyers are buying where buyers are supposed to buy. Sellers are selling where sellers are supposed to sell. Seems all right. If you adjust this for the actual bottom, there's the actual bottom. So it's pretty close. Actually, I got to grab that. You see the role reversal? So they're doing what they're supposed to be doing. That's interesting. Yeah. So Swissy's seems to be doing what it's supposed to be doing. Doesn't seem like anything is getting in the way of it behaving the way you would expect it to. CAD is super strong, crushing the Swiss franc. Well, other things are different. That's fine. If you were going to be a bear, first of all, you'd want that yen to come down. But second of all, you'd be staring at that, right? So as a bear, you'd probably have a template that looked like this. Okay. And let me zoom in here off of the daily. Let's go to an hourly. And so your next trade plan is selling this zone, which you may have already missed if you're a front runner. Okay. Even if you're a front runner, you'd expect some sort of fade, and day traders can catch that. Do I look for divergence when entering a trade? Sure. I wouldn't not look for divergence, but sure. But is it an all-powerful indication? No. The reason for it is I know how divergence is created. So some people look for divergence, let's say on a MACD, and they're like, "Oh my God, Wayne, look at that divergence." But the thing is, I know what creates the divergence, so I can anticipate the divergence before it's actually happened. So by the time I see it, I already know it's going to be there. And divergence comes from less and less bulls being in a trade. So you get divergence where like this, there's lots of bulls, and then this, there's lots of bulls, and this, there's lots of bulls, and this, there's lots of bulls, and then this, lots of bulls, here, significantly less bulls, and so on and so forth. And typically in this scenario here, your oscillators are creating lower highs, even though, let's say, this went up 100% from this low to this high, the oscillator would have only gone up maybe that much. And the reason for is lots of bulls got out of here for a reason, and a lot less got back in, and then it dropped again, and a lot less bulls are here, so it goes up even less, and then of course it tanks, and people will say, oh, that's the divergence, that should put you in a trade. The thing is, what I expect is for you to anticipate the divergence is going to happen because you know why this is going to roll over here. Okay? So you're not going to have divergence unless you're at obvious resistance, for example. Like a reversal pivot. So, right? And that's why you get like these kind of moves where it's heading up, but the oscillator's rolling over. So it's bullish, but there's less bulls than there were the last round. Okay? So you're always going to see the divergence before it happens, and you'll probably be short here and adding a second one here, but the divergence won't be super obvious until it's already happened. Okay. By the time you see it very often, I'm already on the second trade. So the trick, I think, in trading is not to spot the divergence, which is going to happen here, and then trade it, is to anticipate the divergence is going to happen here, okay? And how do you do that? Support and resistance. Okay? Without support and resistance, these things won't occur. You won't get the divergence because the divergence is created from traders being all agreeing here. Everyone's a bull in here, but they're not all agreeing in here. Some are taking profits, some are getting out, some are getting in, but not all. And then less are getting back in here, and more are taking profit here. So the market is still technically bullish, but there are less and less bulls. And the bears haven't really entered. So that's why you have a bullish divergence. It's because they all agreed here and everyone was buying here, and not everyone is buying in here, although it's still technically bullish. So you get a divergence in things like an oscillator. And then by the time the oscillator gives you the divergence, you've already missed the trade because you're supposed to be up on top, not down in here. Okay? So now the best you can hope for after the divergence is tomorrow's trade is going to look like this. Okay? But the thing is, if you don't understand this part, I doubt you're going to trade that part. Okay. Make sense? What time frame is it applicable? Time frames are irrelevant. It's the same indicators. It's the same algorithm. So it comes down to where you are in your planning process. So for example, if you're creating your trade plan, it's probably here. On this time frame, you'll decide whether you want to be a bull or a bear. Once you've made that decision. So let's say I'm a bull and I want to buy this dip. Okay? I got to change my template to be bullish. Okay? And I'll look at it and say, I'm at tomorrow's price. I'm very interested in the moment, maybe buying at this price of 74. Okay? And the logic here, just to make sure everyone's on the clue train, up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down. Yeah, okay, maybe I want to buy. Okay, good, done. Next, that's a 4 hour. So I'm a buyer. That's all I've confirmed. And I've confirmed that the market conditions are still reasonably favorable to being a buyer. Great. Now I know where my price is, somewhere around 74. I may wish to buy if it sets up properly. So now I go into a smaller time frame and I wait for a setup. Okay? Should I buy this? Doesn't look bullish yet. What does it need to do before I consider it turning bullish? Well, let's say if I'm using moving averages, a 5-8 cross up or a 21.55 cross up, okay? Okay? Or a higher low, okay? So I might say, maybe if we breach this level, I'll buy the next dip. Okay, now that's price action. Or what if I use an oscillator? Yeah, let's use an oscillator. Insert, indicators. Won't be custom. Let's put RSI. No, let's do stochastic. Let's do, okay, cool. So I can say, next time we are in this area here, I want to buy a retracement back in. Okay, I could do it that way. The classic way is to wait for a pattern like higher high, higher low, and buy it in Asia. Okay. So if Asia is down, I buy it pre-London. Boom, I fade the sucker. That's going to take hours. I have to buy it now, Wayne. Okay. Well, let's wait for something to occur that you believe is bullish somewhere around the 0.74 level. That's all it is. Whatever you want, brah. Kill that. Okay, so now we're sitting here being patient and disciplined, waiting for our entry. Okay. Nice, right? Yes, swing trading is later today in 2 hours. So my swing traders met with me on Monday. My swing traders met with me on Tuesday. My swing traders met with me on Wednesday. My swing traders are meeting with me today. It's been a big week. Luckily, I've been on holidays from school, but now I got to start homework again. Yeah. I got it, Luca. Thank you. What was it, 7 paragraphs? Thank you. Appreciate you putting the time in. Yeah. No, here's the unfortunate part. I can't actually use it. There are lots of rules when it comes to testimonials and stuff like that. So what I can use is you say, that was an amazing course. It really helped my confidence. That I can use. The big long ones with great detail and stuff. I actually, in the United States of America, can't use it. But I do get the feedback though, right? So I do appreciate what you wrote, and it was good for me. Yeah. This is America. It's right, land of the free, except you can't do things like hedge your trades. It's a free country, but you're not allowed to be long and short the same currency at the same time. Yeah. ADX is just another oscillator. Probably doesn't tell you much different than an RSI or a MACD. Well, thank you, Luke. I appreciate that. Land of the litigators. Yeah, or carry trade or anything, right? Yeah. Yeah. Yeah, it's funny. Well, what can you do? Well, I guess we're done. It's been a long week. So why don't we wrap up here, and I'll see the swing traders in 2 hours in the swing.fxbootcamp.com. And then we will meet tomorrow for Friday, Jeremy, and we can do that as well. Okay. So thank you for being on my team. Peace on earth. May the pips be with you. May the profits be above average.